Forex traders, another week. Oh, scruffy air walking in the wind. So, how do we go on Friday? Not well. We sold the Aussie before the NFP, and it has turned into a sharp short squeeze, and it's looking pretty solid here. So I remember I stopped to just above the last week's high. If that gets broken above 75, above 75.20, that's it, I'm gone. And then I'll have to sort of rethink my selling Aussie bias I've got, because I've got a pretty strong one, and I don't want to let that affect my trading all week and all month. There's a lot going on elsewhere in the market, so take your losses, move on, and then look for that next opportunity. Now, the reason why this is such a big week is that we have not just the UK election on Thursday and the ECB on Thursday. We also got Comey's testimony on Thursday, which could be a huge event for the US dollar if he was to once again call out Trump for undue influence. If that happens, then last time the Dow fell 500 points in terms of market being spooked about potential impeachment, derailing of Trump's agenda, and if it's back on the table, then a derailing of Trump's agenda at the very least is going to be a theme on Friday. And given that ECB could be tapering or talk about tapering, and maybe May wins the election by more than some of the polls suggest, it could have this huge effect where US dollars getting sold on negative sentiment and euros rallying on the ECB confirming tapering rumors. Literally, the range for the euro this week is probably 116 to 110. A huge sort of outcome potential. Pound, the range is 132, 133 down to 125. Huge sort of outcome. Dollar yen, potential from 112 probably to 108, given what Comey says. Sitting pretty just above 110 at the moment, under pressure still from the weak NFP. But you've got this huge event risk coming up here that's going to really dictate how we play out. Now, you can also imagine a scenario where, say, May doesn't do well and Comey indicates Trump put pressure on him. That's pound yen down like 1,000 points or 800 points, 500 points at least. Now, that's the sort of effect you can have this week, and so put on your seatbelts. The market's going to move a lot. Probably Aussie isn't. There's if stocks fall, then Aussie doesn't do that well, so it's not going to get the full brunt of any sort of Trump derailment rally against, it won't really rally that well, but the euro will. Risk off if stocks fall, then Aussie yen drags down too fast and euro Aussie buying's too much, so Aussie's probably not going to be too affected. But this is we're only talking about 50 more pips till it stops, so it can definitely get hit. And if it works out, then I probably just have to also mellow out my bearishness. It's just no follow through in the Aussie. That's the thing. So many of these sell-offs have been reversed, and it's getting a little bit fatiguing as a trader. I was finally, convinced that, okay, there's enough things lined up here that the Aussie's going to make that move to 72, and it might, all right? But I also have to now adjust my thinking to the timeline. This is probably going to take months, yeah, and maybe my capital's better to be put into other usage than the Aussie dollar. Now, the big event risk for the Aussie, apart from Trump and all the shenanigans going on Thursday, is the RBA tomorrow. Now, RBA should be a little bit dovish given the weakness in iron ore and global commodities since the last meeting. Also, just some of the housing data is being a little bit dangerously, pointing to a little bit of fall. And the capex was pretty weak, so you could get the RBA coming across as dovish, pushing back the timeline for when they next raise rates, from early Q1 next year to later in the year. If that was the case, and they're justified in doing so, then the Aussie should come under selling pressure tomorrow. If for some reason they remain relatively neutral or upbeat, then perhaps the Aussie will be able to gain more if the US dollar remains under pressure, and if the euro is breaking high, continue to grind higher, and the dollar yen's breaking low, then Aussie will break 75 and take out all those stops, mine included, if that was to be the case. So there is definitely ways that the market can rally. I remember talking to you about this trade last week, and I was like, I can't even see a way the market will rally. Yeah, and that was just me being ultra bearish, and I said, look, I'll be surprised, and let's see if it can stop me out. I want to see how it does that, and so it's showing you how a scenario, a pathway from that Thursday last week or the Wednesday last week to here that it didn't require too much, just some weak NFP and a little bit of a short squeeze, and now we're really testing the top side. You can see the trend line sort of resistance we're bumping up against right now. Hopefully that holds. I want to see us, tomorrow around 74.50, and then I can start to be a little bit more bearish. But I cut a couple other trades that we had running, so we're pretty clean here in terms of the market's outlook. Now the pound as well, we had some negative news in terms of polls, and it's showing a lot of strength in terms of resilience anyway. So perhaps like Andrew was talking about in the update post NFP, perhaps the skittishness of this polling being tight is being played out, and more the weak US dollar is in control. But keep an eye on this pound yen, because this is where a lot of the selling comes from on the pound. So if we are going to get some movement to the downside, it's probably going to come through pound yen. If that gets aggressive enough, can drag the pound lower. But it's definitely stable during the Asian session, wasn't it? And now we have the holidays in Europe. It's not moving too quickly, but it's showing buoyancy, and in face of negative news that it keeps on grinding higher, terrorism and tightening polls. It's actually behaving quite bullishly. So keep that in the back of your mind here, that the stops above 129.20 are definitely can get taken. Not so much about a wage growth today. I mean, look, the market was already in bullish mode, and more the Chinese PMI. You saw the market move on, and also just a short squeeze came through on the Aussie Kiwi, and that Aussie Kiwi. So you can tell that it is Aussie short squeeze because the Kiwi got sold at the same time, all right, as the Aussie was punching higher there, bring out the same time period. So this bit here, and then there's the stops above the previous high from last week's capex numbers. So the capex number stops here got taken. So if you're talking about how this short squeeze sort of manifested itself, it wasn't so much about local data was good. That was really low tier data. If you're talking about the operating profits, and those are really volatile numbers, so that's not the thing. I think it's more the Chinese numbers. And that Aussie Kiwi short squeeze. Now Aussie Kiwi was, on the really back foot here, all last week. This is tremendously oversold. It's like 11 days selling. So there's always going to be that snapback. 105 is probably going to hold though, and that will probably add to the Aussie dollar selling if the Aussie also holds on its trend line, and then some Aussie Kiwi selling comes through. Then you can imagine that the Aussie little relief rally here might be overwhelmed, but by no means am I looking to sell. And if you're not in the market, don't go chasing this trade. It's a much more dangerous trade than last week selling the Aussie. We are seeing some pound strength also on the back of the service PMI. It was not as weak as some had been whispering. It was a little bit weaker though. So still showing strength on the back of that data too. Saw this little pop. The internals, I was looking at it. I was reading a couple of banks. They were expecting that slowdown, so maybe that forecast number wasn't so bad. Yeah, so this is really strong. Combine this with the polls, terrorism, and softer PMI, service PMI. This is really bullish price action. I wonder if this is the real direction for today. Wedging too. So it does sort of make sense that we will break higher. If we do, we'll take those stops up towards that 129.30. I probably won't be selling up there either pre-game. Now Euro, if it was to sort of have profit taking into Thursday, that will make more sense than a continuation higher, and that would put us a little bit above, probably in that 112.20 to 112.50 sort of level. A break below 112 would be interesting in terms of profit taking if that happened, but I don't see that happening too easily unless there's leaks. Now, sometimes before ECB meetings you do get those leaks, and those leaks will lead to a little bit sharper movement. If the ECB wants to set the tone and set market expectations about this tapering business, then perhaps we will get leaks from what they would call ECB sources. So yeah, there's a lot on here. So we're going to be really nimble in terms of how we play it. Gold is just surging higher though. The uncertainty and the combination of uncertainty and weak US dollar is really punching high here. It was really strong. Even stocks were rallying, right? Last week we were worried about it being just outrageously strong. It's showing that strength now. What happened to my charts? Sorry guys, I've been flicking it over and it hasn't loaded yet. 1 second, let me let it load it up. Let me load it up. Gold, AMFX. So we got Brett Donnelly's latest. I mean, this guy's pretty good. Hit and miss, but he's still pretty good. Alright, advantage or disadvantage of putting gold $1 into $1 into gold or T-bills for 20 years. Gold's outperforming cash right now. I mean, that would be the case, right, with low yields. So it's talking up the gold rally. Looking at the historical relationship there, not really a trade idea though behind that. Probably just saying why is it so attractive to be buying gold. I like gold here as a hedge against all this event risk coming up. Mainly Trump. I think it's a good event risk. For some reason though, you're seeing stocks stubbornly strong, and that is making it harder to be ultra bullish for me anyway on gold. So one of them's wrong. You know, either gold's overtly, you know, in demand here when there's nothing in the background wrong, and that would set up a post-Comey, Trump didn't do anything wrong crash, or you know, he does open the lid there and gold can break 1300. I don't think there's too many other outcomes here. Like, we'll do this, you know, sort of test next week, next Monday. If gold probably is going to be above 1300, all right, or below 1260, yeah, probably below 1250 actually on the downside if it turns out that Comey didn't get any pressure, leading into the Fed raising rates the next week. Yeah, that's that wedge that we're talking about in the pound. So we could probably trade that. It's probably tradable in some regards. I'm not going to touch it at the moment. Now I'm expecting dollar yen to test 110, sorry, this week. It's a little too close not to test it. Now how much demand we get down here is probably going to indicate, you know, how it behaves. Now it could be etching out a little bit of a range trading between 110 and 114, or it could be the range could be a little bit lower. Remember Deutsche Bank was talking about 108 to 112. We thought it was orbit around 110 in the coming months. Now, look, probably next week's Fed rate hike and how it comes across, if it's a dovish hike, whether we get, you know, the chances of there being 2 more rate hikes after this hike this year, or whether it's, you know, priced out and it's a delayed, you know, they're patient and they talk about December, and December gets priced in, then dollar yen will struggle in that environment unless the 10 years start to rally. Now, I told you that the good news is not helping 10 years, but the negative news that we got from the NFP is definitely hurting the 10 years. So if you're looking at the 10-year bond yield and been watching it, that 230 level is getting further and further away. And that's contributing to this sort of feeling of doom. So that trade that we're looking at to sort of sell some dollar yen if we got the chance, we didn't get a chance really, because that number was so weak. But we're further and further away from this too. And this 216 is the low from the year. 2165, where do we go? 214, okay, we're back above that. See if that breaks lower, because that will send us down to 2. And that would be another round of US dollar weakness. If that happens, we're talking dollar yen back towards 105, and euro probably towards 117, 118, if it was to continue to fall here. So it's not a unimportant sort of level. Is the pound going to weaken or strengthen against the euro? So you know how we talked about the ranges expected to this week, Baco. The ranges on euro pound, given that both of those pairs are in play, is we're talking 85 to 90, mate. So we're right in the middle of that range, and you're saying where are we going from here? Right. Well, the scenario where May doesn't do well, did pound just break higher? Break that wedge higher? Let's have a look. Yeah, it did. Yeah, it did. Stops are coming. Top side. So if May doesn't do well and ECB talks taper, then we're going to 90. If May does well and Draghi's a dove, and that's a real possibility, then we're going to 85. So that's this week. So there's huge moves coming. I'm pretty not going to try and position myself beforehand. I'm going to try and trade Thursday as the news comes out, knowing that there's so much room for continuation moves on Thursday that I'll try and get in early and push forward. Not sure who's doing Draghi live this week. Maybe Andrew or Jason's going to do it live. I don't know if I am, but I might be. Could be good though. Yeah, it's some sort of crazy holiday in Europe today. I'm not sure what it is. Whit Sunday. Literally, Whit Monday. Whit Monday. Which is, I've been told today, is the reason Whit Sundays got called Whit Sundays. It's because of, it was on that day that they found it. So yeah, this is going to be an interesting, very interesting week, and if you're got an EA running, turn it off, and if you don't trade news and don't like charts getting messed up, then be very careful, because charts are going to get wrecked. Technical analysts are going to have a fucking headache at the end of this week trying to predict this sort of move coming. Well, let's have a look at some of the data. Some of the research that came out. This one I found interesting. Headline anyway. Trump's antagonistic, ill-disciplined style of economic nationalism is a dead weight on the US dollar. Japanese equities have broken away from dollar yen. So you're looking at the Nikkei, right? Nikkei and dollar yen are usually very much entwined. And Nikkei is still above 20,000 and dollar yen's at 110. So there's really a disconnect there. Dollar yen's breaking away from US stocks too. Now, correlation trading is a fair bit of how I make trade ideas. So this is why, I was talking about that underwhelming, underperforming dollar yen being so weird. Now it's, you got to drop your doodle view. I can't just say, stocks fall, dollar yen falls, stocks rise, dollar yen rises. Probably still, if stocks fall, dollar yen's going to fall. But right now, you can't rely on stocks rising to help dollar yen rise at all. It needs to come from the yield market. It needs to come from the bond market. And that's where the underperformance of US yields is. That's where they're pricing in a potential mistake here if the Fed raises. And that's where you get that underperformance in US 10-year. And perhaps there is some sort of hedging going on there regarding Trump, and that just for some reason hasn't come across into stock markets, which are just outrageously strong and holding at all-time highs. The stock's probably dumb money in that regard. There is a relationship between gold going up and dollar yen going down. So in that sense, gold is telling you something's wrong. So one of those things is wrong. Either gold's going up and something's big's coming with Trump, and that's why dollar yen's underperforming, or there is going to be that relief rally in dollar yen, and we're going to find that support soon. You don't see that disconnect go for too long. Not between gold and dollar yen anyway. Maybe this is a delayed reaction to pulling out of the Paris Agreement. I don't know. I don't think that's too big in the economics. But it's like everything together in terms of what Trump's doing makes it a little less unsure. Perhaps that is a little why we're seeing that. And US has got negative bookings compared to last year. Okay. So maybe, in terms of that, there is a bit of concern. China's come out trying to lead the world in both free trade and in clean energy, which is crazy. Imagine trying to tell someone this was going to happen 10 years ago. That Trump was going to get elected and let China try to gain the moral high ground in all these important topics. Alright, let's have a look at the week ahead, make sure we're not missing something. I don't think we are, though. There's some crazy news regarding Qatar today. Saudi Arabia, Egypt, Bahrain, Yemen have all cut ties with Qatar. I think it's crazy negative, but it's still something to keep an eye on. That's a very volatile part of the world, right? I think Euro is primed to have a reversal. See the best reward. It's short Euro pound. That's their trade. Barclays. Alright, changing forward guidance or risk assessment is while the Tim said thing. We suggest an unchanged statement would likely weigh on the euro, of course, and support a European rally in European equities. So DAX makes fresh all-time highs if there is no talk of tapering. Lower for longer is being seen nearly everywhere. I doubt the Eurozone is going to be different. So I'm actually, sort of expecting a pullback and Draghi to try and talk it down as well. Now, what I suspect though is that the market's not going to let it get very far. Because of that US dollar underperformance, I suspect that the Draghi talking it down, similar to when Draghi talked it down last time, won't have a very sustained effect, and we can start to buy that dip. So I'm using any sort of dip we get from Draghi as a buying opportunity. Hopefully towards 111, 110. That would be great if we can get that sort of size selling, because I think it's going to be short-lived, and the market expects Draghi to talk it down. Not expects it, but it's not a surprise. And I think overall the weak US dollar and just some sort of feeling that it is inevitable will allow us to buy that dip with a little bit of certainty, but we'll keep an eye on the price action. We don't want to be stuck at 110 and it falling back. 108 stops would be quite big there. Now that should just coincide with what dollar yen does, and this Comey testimony. So Thursday really does have that opportunity to push it down, but we're looking for buying opportunities if we do get it back down below 111. and the next rally will be harder to stop. You know, if it's a bit more organic and doesn't need Draghi so much. Maybe doesn't even need, just needs that weakness on the US dollar. So we'll see. We'll see if we get that opportunity. It'll be something for us, and then obviously pound's going to be going berserk if May has a good election. So yeah, Euro pound will be really weak. Euro pound will be down towards 85 quite easily. Put a gun to my head, Baco, that is what I would do. I would sell Euro pound, sorry. And I was wrong on the Trump election. I was wrong on the Brexit. I keep on giving these electorates the benefit of the doubt. Perhaps I shouldn't be doing that. Let's quickly check the EMR. So this is by Jim Reed. This is the most widely read macro report in the world. Easy to see. It usually has everything in there that you need to be watching. So yeah, there's attacks in London. Didn't really lead to any sell-off. It was third attack in the last 3 months. Might have some sort of effect though on polls. We'll see. He's talking about the Super Thursday. Deutsche Bank economists have changed the ECB call. They think the balance of probabilities has shifted away from a change to forward guidance so soon, with the soft May flash inflation print perhaps helping offset confidence in the growth outlook. Okay, yeah. PMIs were a little bit weaker as well in France today, so perhaps there is some uncertainty going forward. And the Chinese PMI was pretty weak, so perhaps there is global growth uncertainty. What are we talking about here? He's talking about this Saudi Arabia and Bahrain going UAE as well with Qatar. It's related to Qatar's backing of Iranian-backed terrorism activity in the region. Okay, I didn't know they were that linked. Qatar, from what I read today, is the most developed Middle Eastern country, right? Gulf country. The richest. I think the reaction was down 6% when I saw it flash across Reuters. Dollar index has hit its lowest point since October. We haven't checked in on the dollar index for a while. It's another reason to be suspecting that we're going to hit that 100 level on dollar yen. Also on Thursday we do get Chinese trade balance. This is important for the Aussie. Definitely the import figures that come out in that trade balance release, that's what you look for. If you're wondering why the Aussie's moving and the trade data looks good, go and look at the internals and you'll see if it's, you know, both exports and imports fell, but imports fell more. So trade balance looks good, but that's really bad for the Aussie. So we see that a fair bit lately. So you can see a nice headline number, then the Aussie reverse. You're like, what's going on? You've got to look at the internals. I might be in the room that time, so just ask me what's going on. Let you know a bit more about that. Wow, Thursday's just massive, huh? Massive. In terms of tomorrow's RBA, don't expect too much. Yeah, don't expect too much. A really, you know, slight dovishness is potential. But other than that, unchanged, completely unchanged almost. Alright guys, so let us see how we go this week. This is going to be a very interesting week. I'm not going to trade too much until Thursday, I don't suspect. Thursday I'm going to try and get on a bull and ride it. We'll talk about more possible ways of playing the 3 big event risks on Thursday, and you know which trades are going to be the cleanest depending on what you're trying to play. So you know, say you say you want to play some Eurozone weakness and Euro underperformance and Comey not indicating Trump, then you know what's the best way to do that? You know, is it Euro pound or is it Euro straight? You know, is Euro Aussie still a trade? Long, you know, there's going to be a few different trades we'll look at, but yeah, in the short term anyway, we're just going to wait and see how this develops today. Nothing glaring here as an opportunity. And I do suspect that the profit taking in Euro gets a bit more throughout the week. I don't think we break 113. Even if dollar yen breaks 110, I don't think that's enough to lift the Euro higher above 113. You never know. It's just, I think a lot of traders, even the bullish ones like I am, like I'm bullish on this whole trade, and we've talked about it for months, you know, going to 120 perhaps by the end of the year. I think Draghi is so relentlessly dovish that, you know, I mean, I'm just expecting to come out, just trying to pour cold water on this, and it's then up to us to buy that dip and see if we can sort of rally regardless of the ECB. And that happens all the time. The market always, you know, does things not priced in by the central bank, and you're seeing that in dollar yen right now. You know, this is not acting like a currency. You know, dollar's not acting like a currency that's raising rates a couple of times. So we'll see. The bond market can force the hand of the central bank, and if we see yields in Europe continue to rise, even though the central bank hasn't indicated tapering, you'll know that they've lost a little bit of control. And the more they fight, the market will be like, haha, you know, we'll just try to push it higher. So we'll see. We'll see how it plays out. Alright guys, I'll be back tomorrow same time. Hopefully we've got a trade idea for you tomorrow. Nothing clean at the moment. And I'll give some thought to how I'm going to play this week's big risk events.